One of the key and best skills that you can develop is to identify the end of a trend. In other words, when you shouldn't be looking to buy and when you should be looking to lock in at least some profits. We're going to dive into a coin called Aleph Zero, which is making a nice trending move where the price has doubled over the last 6 weeks, but it looks like it's coming towards the end of a trend, and there's a particular pattern that I want you to be aware of. So when you see this pattern, you know that the trend is coming towards an end. So if you like today's video, like, subscribe, hit the bell notification. Let's dive straight into Aleph Zero. With Aleph Zero, just quickly looking at their website, they're a 0-1 solution or zero knowledge paired with scalability. In other words, a layer 1 solution, privacy enhancing blockchain. Strong project. I've been aware of this project for quite a while because I know some people that got in on its launch. But what we're going to focus on is the price behavior, the buying and selling psychology. Now, you've probably heard me say it time and time again. The markets tend to move in 5s and 3s. And when a market is making a clear 5-wave pattern to the upside, it's coming towards typically an end of a trend. Now, recently, Aleph Zero's price has doubled in price, but there's a few big clues right now that tell us we're probably coming towards the end of a local trend and we're due for a correction. The first thing is the weekly momentum. So currently we're looking at a daily chart. The time frame above that is a weekly time frame, and it tells us this dashboard, which I've created, is strong overbought. In other words, the upside is limited. So let me just show you this. I'm going to show you this because it's really powerful information. I'll show it to a bit of detail. Here, I'm just going to go into a weekly chart in the top left-hand corner. And Aleph Zero has only launched last year, so it's only been out for a year. But the weekly momentum, what I'm basing it on is this over here. And the last time it was like this over here, we can see that we had a local top. And the time before that was over here, and we had this top over here. So this would indicate to us that we may be close to a top, right? So that's from a momentum perspective, which measures the rate of change. And you want to use some type of a momentum indicator. My favorite by far is the stochastics RSI. Very reliable. It's a lagging indicator, but can be very, very helpful. So that's what the dashboard is showing us. So if I just go now back into the daily chart, which I keep in the top right-hand corner over here, that's what this information is telling us over here, what we just looked at. It just simplifies the information, tells us based on momentum, the upside is limited. The current daily momentum is bullish. That's based on this. But the key thing that I want you to take away from today is that we've got a clean 1, 2, looks like a clean 3, an ABC of a 4, pretty classic wave 4. This high has been exceeded, and we look like we're on the final stages of a wave 5. Now, I've put a question mark here because that has not been confirmed as a top yet, but we are approaching a top. And I'm going to use something called Fibonacci price ratios next to show us how we can really look at what's the typical buying behavior in an upward trend where the top is likely to end. Now, just to help you on your journey to learn more, I've actually got a free membership area now where not only you'll get Bitcoin updates, which is really, really important because that's going to give us a key indicator on the rest of the market. I've also included some basic training on Elliott Wave basics and some Fibonacci basics. And we're going to go into Fibonacci in just a second. And I do highly encourage this because I just filmed a new report yesterday for Bitcoin. It's in a key position, the downward trend with Bitcoin. We've had this big downward move. We're probably going to see some type of correction. We're probably going to see a continuation down with Bitcoin by going to the technical reasons of why you want to be on high alert in the Bitcoin report, which is now free, so you can get the link below and download or get access, should I say. So now let's just go into Aleph Zero with Fibonacci price. I'm just going to do some price projections. There's two key ones that are really, really common, very typical, because what we're looking for is a high probability edge. What's the common buying and selling psychology that we want to be aware of? So there's a couple of factors I want to look at. Something called an external retracement. So I'm just going to quickly do it here, where we measure wave 4. I'm going to take the extremes of wave 4, and there's these two ratios that is most common for an end of wave 5, and we can see we're in that zone right now. And there's something called a alternate price projection, also known as a Fibonacci price extension, where we're going to measure wave 1 to this wave 3, project it from what looked like this wave 4 down here. And there's 3 key ratios that I just want to bring to your attention. And the 3 key ratios is the typical minimum is 38.2%. Now we've already exceeded that over here. So that we're going to eliminate in just a second. The 62%, which we're at right now. And if this overextends, the next price zone is this 100% zone. So we're going to be in a high alert of $1.83. Now, forget that it's Aleph 0 for a second. The principles and the methodology that I'm showing you right now applies to all crypto, all markets, and all time frames. The key takeaway is the 5-wave pattern combined with Fibonacci price, combined with momentum. So what are going to be some of the key indicators that we're topping out? Well, I'm going to show you a couple of things here. The first one is this daily momentum. You can see that when the blue line crosses below the red, it tends to coincide quite nicely with these highs. So it gives us some valuable insights of where the market is topping out. So it's probably going to take another 1 or 2 days for the daily momentum to come into this zone here. So that just indicates that we're probably going to be still sideways to up for a couple of days. So I wouldn't be overly surprised if we get an overextension. Because remember, with crypto especially, there's panic buying. And retail, the dumb money, is called dumb money because it's the non-thinking crowd tend to FOMO in, fear of missing out, into the market towards the end of a trend. So what we're going to look at is when the momentum reaches this zone over here. We are already in the price zones already. We have already got a 5-wave structure. So there's 2 other things I want to cover with you. One is we're going to go into a lower degree time frame to look at how this is breaking down, because that can help us really pinpoint the end of a trend. And then we're going to come back to a daily chart and we're going to look at, okay, if it does top out, what typically occurs next, more often than not, that you should be prepared for. So now let's just quickly dive into a hourly chart. So I'm going to go into my bottom right hand corner. It's going to focus on this price action over here. And what I'm looking at, I'm just looking at it with fresh eyes, is does this sequence break down to any pattern that can help us? And it does. I'm actually even going to go, sorry, this is a 4-hour chart. I'm just going to go into a 1-hour chart. Sometimes it's just clearer to see on a 1-hour chart. Okay, here we go. So when I'm looking at this potentially looks like, I'm just looking at it with fresh eyes because it was a member of my community, that private community, that asked me to look at Aleph 0. And I'm just looking at this. And, we've got this initial move up, some type of correction. Is this a typical wave 3? And I'm gonna check it. So a typical wave 3 is normally 1.618 of wave 1. So I like to just measure it, and that gives me a good feel for where the market is. And is it likely a wave 3 or is it not a wave 3? So just based on what I just did there, my conclusion is we actually look like we have formed some type of wave 1, 2. This looks like a 3, some type of ABC of a 4. We're probably on the final stages of a wave 5. Now, again, don't be overly surprised. In crypto especially, the market tends to overextend and there's panic buying. More common in commodities, but I found it to be very common in crypto as well. So what we're going to do now is just going to finish on a daily chart. And again, that's what I just drew out over here. That just helps us break down that we're likely coming towards the end of it's called a wave 5 of a wave 5. It's like 2 degrees of wave counts that are telling us the same piece of information. But I'm just going to keep that on the hourly chart. So this is TradingView, by the way, that I'm using. I don't want that there. All right. So then last but not least is like, okay, if the top occurs, what typically occurs next? Like how long would a correction last for? So before I even go into that, what I want you to know is a piece of information that tells you that the top is likely in. So we want the market to tell us when the top is in, as opposed to us just trying to pick the top. One of the easiest ways is using something called a 1-bar low. In other words, This is the low of the bar. The next bar is over here. The next bar is over here. When the price exceeds the 1 bar low or goes below the 1 bar low, that's a good first indication that the top is in. So what you could do if you're long on Aleph 0, rather than just trying to sell right now, because we don't know, it could go on for another few days and it could really pump like crazy, because there are a few other factors, one of which is, let me just zoom it in, is the fact that the last high over here is, we're in that zone and we're breaking that zone. And sometimes people pay attention to this and you'll just see a surge above this, but it's a fake breakout. So it's panic buying. It's panic buying. So rather than trying to sell at the top, what you can do instead, if you got a stop loss, or you can just set an alert with TradingView, just right click and just click add an alert for a price point and write yourself a note, is you literally just put your alert on the 1 bar low. The next bar might go high again. And again, you put your alert on the 1 bar low. We might have another bar on the high. And then the next one may take out the low. And that's when you want to exit, because you don't know how far it's going to go on the upside. All right, let's just finish today on, let's just assume for a second the top has been made. What typically occurs after a 5-wave sequence? Well, more often than not, let's just say the top was made today. Let's just say it was today. More often than not, you'll see what's called a 50% retracement in price. That's the typical minimum, and the typical maximum is 50% to 78.6%, and an in between of 68.2 or 61 or 0.618. That's a Fibonacci ratio. So just be prepared that at some stage, after the buying's done and the momentum reverses, we're probably going to see some type of pullback. More often than not, just like you saw with this wave 4, this 3-wave structure here, a bigger degree of that kind of structure. Normally something like this. At this point, if this occurs, because we don't know yet, right? I'm just forecasting now, where we're kind of looking into the future, what's likely to occur. If this case does unfold, what typically occurs next? Well, it's a continuation of the former trend. So the former trend is this 5-wave impulsive move to the upside. It doesn't mean we're going to get it, but more than likely, based on momentum, pattern, price, we're probably going to see some type of ABC correction. I'm just going to draw it like this so you can see it clearly. And then, getting ahead of myself, but I think it'll be valuable for you to know this, is the next move to the upside tends to be an extension of what we just saw. Let's just say it moved up to here. The next move to the upside, more often than not, as a minimum will be 100%, but more typical will be the 1.618. In other words, the next price zone is like $2.54, where Aleph 0 will more than likely, if this kind of correction occurs over the next 2 to 6 weeks, maybe even 8 weeks, we're talking about, beginning of March, first couple of weeks of March, we may get then a continuation of the upside. So the key thing to take away from today is the trend is your friend. You want to ride it until its end, until it reaches its bend. Using a 5-wave structure is a really powerful way of knowing we are approaching the end of a trend. So do check out the free Bitcoin report. I got some free training in there as well. Just take your trading to the next level. I just done a detailed update yesterday with Bitcoin, and it will just help you see what is likely to occur next. So if you like today's video, like, subscribe, hit the bell notification. Do share this video, because that 5-wave pattern is one of the most powerful things that I've ever come across when I've been trading. I've been trading for over 15 years now. It's one of the most powerful things. So let's read a quote from my book. We'll go with chapter number 1. No, it's not chapter number 2, actually. It's Warren Buffett. One of his famous quotes is, rule number 1, never lose money. And rule number 2, never forget rule number 1. Now, losing money is the part of business when you're coming into doing trading. That's just the name of the game. What you really want to be doing is minimizing losses and maximizing gains. So when you do catch a trend, you not only ride that trend, but you want to know when it is coming towards an end so you can start tightening your stop loss or whatever methodology you're using to lock in those profits. So you have tight risk management. So you have it. The term is acceptable capital exposure on how much you're risking to lose to find out if you're right. And if you're right, you can make a lot of money. And when you're wrong, you lose a little bit of money. And then you can just be consistent with the market so you can play the game long term.